Good evening. Let's continue our discussion of GST. If you look at very closely on the screen, my dear close friends, if you look at the first line, the following is the list of indirect taxes, meaning whatever have been given on the screen, they were the indirect taxes. They are not existing today, but they were existing before the GST has come into the picture. As we know, GST came into effect on July 1st, 2017, but before that one, there were so many indirect taxes that were existing. If you look at the list very closely, central excise duty, duties of excise, additional duties of excise, additional duties of customs, special additional duty of customs like cess, state VAT, central sales tax, purchase tax, luxury tax, entertainment tax, entry tax, taxes on advertisement, and taxes on lotteries, betting, and gambling. So there were so many taxes that were existing during the time, but with the introduction of GST, with the GST came into force on July 1st, 2017, all these taxes have been included under, they have been subsumed under the GST. That is the reason why we don't see these taxes now. Clear? But they all have not been removed completely, but they have been subsumed under GST. Clear? Kindly remember, as we understood in the earlier class, taxes are considered to be the most important source of income to the government. Government cannot afford to remove the taxes, but the government will introduce more and more taxes. Am I clear? Very, very important one. So this is the way the government has to generate its revenue. That is the reason why sometimes we will also see that the government will also increase the tax rate. The moment tax rate is increased, we are forced to pay more, and that will add more revenue to the government. Am I clear? Next, let's go ahead and see here. If you look at this one, when it comes to CGST, we know what is this, SGST and IGST. These three have replaced all the above taxes. So what are all the taxes we saw in the on the this earlier image, earlier screen? So those taxes are no more existing. They are included under CGST, SGST, and IGST. In comprehensive manner, I can say they all have been subsumed under GST. Clear? But however, the chargeability of the CST, meaning central service tax, for interstate purchase at a concessional rate of 2%. So this is even today also existing. By issue and utilization of the C form is still prevalent for certain non-GST goods. Very important one. Almost all the goods are falling under GST. Listen to me carefully. Almost all the goods are falling under GST, but some goods are not falling under GST. Some goods are out of the purview of GST. That is the reason why they are called non-GST goods. Meaning, for these items, separate tax is imposed. They will not be falling under GST, and such goods are called non-GST goods. So now the possible question in the examination is that which of the following are the non-GST goods? Am I clear? Now look at this: crude petroleum, high-speed diesel, motor spirit, commonly known as the petrol, natural gas, aviation turbine fuel, followed by alcoholic liquor for human consumption. So these are kept out of the purview of the GST. That is the reason why they are considered to be non-GST goods. Very, 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 very important one. Am I clear? Next. So whatever the possible and probable question I told you, please remember that one. It may be asked in the examination. Look at this. Now if you look at the the changes with the GST. Now I am going to show you two important the tables. that is related to the taxation system. First table we are going to look into, that is pre-GST era, and the second one is the post-GST era. Is it okay? So after the GST has come into effect, what is the current situation now? But before the GST, what was the tax situation? We will try to understand. I told you one point very clearly. GST has been introduced in India for many reasons, and one reason is to provide the goods and services to the people at the cheaper rates. The cheaper rates will come into the picture only when you avoid double taxation. So tax on tax must be avoided. But if you are imposing tax on tax, ultimately the customer or consumer is forced to pay more money. That is one reason why the GST has come into the picture. The tax on tax has been avoided under GST. I am going to show you along with the clear examples, that is going to be in the form of the tables. So I am going to show you the two tables. Table number 1, that is pre-GST era, and table number 2 from the date the GST has come into effect. Clear? Kindly pay attention. This is very, very important for you. The moment you understand these two tables, you will be very, very, very clear and convinced why GST has been reduced. That has become, the really very important and significant on the part of the government with respect to the welfare of the people. Look at this. So the tax calculation before GST, right? So now look at this one. A manufacturer, please understand this very clearly and closely. Just a moment. Yes, right? So now, so we have the manufacturer. Manufacturer got the raw material and he produced a product, and that product is costing 1000 rupees. For your understanding, we have taken a small amount. 1000 rupees is the cost of the product. But please remember, I told you already, if you want to make a product and if you want the consumer to purchase it, this one, there is a big supply chain. When I am saying manufacturer here, even before manufacturer, the products must be coming in the form of raw material. So the raw material are taken by the manufacturer and various ingredients are added, and finally you are making a product. Is that clear? So now once you make a product, the tax will come into the picture, and the tax is 10%. That is 100 rupees. Clear? And the total became 1100 rupees. So this is at the the so-called the beginning level, at the supply chain. Understand very clearly. Cost of the product is 1000 rupees. 10% is the tax, meaning 100 rupees. 1000 rupees plus 100 rupees became 1100 or 1100 rupees. Am I clear? Now, so when this particular product comes to the warehouse, where you are adding a label and you are repacking. Is that okay? So manufacturer has manufactured and it came to the warehouse where a label is being added and it has been repacked, and for that the charges are 300 rupees. Kindly remember, the cost of the actual product is 1000 rupees. But for the purpose of the label and repacking, how much you are charging? So you are adding 300 rupees more. Is that okay? So when you add 300 rupees here, this is 1000 rupees plus 300 rupees, that should become 1300 only. But if you observe very clearly, this is 1400 here. How come it is 1400? If you observe very clearly, the total is 1100 at the manufacturer level only. 1000 rupees is the cost of the product, 100 rupees is the tax, and it became 1100. Now what happened? You have already added taxes at the manufacturer level, and after adding the taxes, then you are adding 300 rupees to the value of the product, right? So this 1100 plus 300, it became 1400. And 1400 also includes this 100 rupees as a tax. So whatever the tax you have already paid, again the tax amount has also been added here. Now you are charging 10 more percent on 1400, not on 1300. This is the pre-GST regime. Am I clear? So when you are charging 10% on 1400, this is becoming 140 rupees and the cost is becoming 1540 at the warehouse level. So here you have paid 10% here, another 10% is added here. So you are adding a tax on tax. Hope you are getting this. Now come to the third stage. When it goes to the retailer advertises, so this is costing 500 rupees, right? So what you should do, 1000 rupees plus 300 plus 500 should be added. But instead here you are adding 300 rupees to 1100 and it is becoming 1400. For this 1540 you are adding 500 and this is becoming 2040, right? This 2040 has got 10% of the tax plus 10% of the tax here, and again on this one you are charging 10%. Hope you are getting this. Very, very, very important. And finally the product value is reaching to the level of 2244, where the tax has been imposed on tax also. So people are forced to pay the tax. This is called double taxation. But people did not understand. Government did not understand in the beginning. But the time the government understood, it became so late. And the government has opened the eyes and it initiated the process in the year 2000. By the time it became reality, so we have reached the year 2017. Am I clear? Otherwise, what should be here? If you look at the actual value of the product is 1800 only, right? Why? Because the manufacturer 1000 rupees plus 300 rupees at warehouse, 500 rupees at retailer advice, right? Advertisement. 100 rupees, sorry, 1000 rupees plus 300 rupees, 1300 plus 500, it should be 1800 only. Is that okay? On this 1800, if you charge 10%, that is becoming 180. Am I clear? But how much you are paying here tax? You are paying 444 rupees. And the total value is becoming 2244. That is all because, tax on tax. Is that okay? So without excluding this tax, onto the total at each level, you are adding the additional cost and imposing 10% again, imposing 10% again, imposing 10% again, and finally that is becoming 2244. Am I clear? Very, 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 very important one. This is what exactly happened, pre-GST regime. Hope you are getting, my dear friends. But what happened after the introduction of the GST? That is important. How the people are getting benefited? That is important. Now, so in the current regime, what is happening? Same example we are taking. 1000 rupees at the manufacturer level, right? 10% is, the 100 rupees. Is that okay? Actual liability is 100 rupees only, and the cost is becoming 1100. Agreed. Is that okay? When you are coming to the warehouse, add labels and repacks, you are adding 300. Is that okay? Because the 10% has already been added here, because 100 rupees has already been added here, in the post, this after the introduction of the GST, you are adding the warehouse cost only to the manufacturer cost here, excluding the tax, because the tax has already been paid. That is the reason why this is becoming 1300. 1000 rupees plus 300, this is 1300. And on this 1300, you are paying, the tax of 130 rupees. Is that okay? 10%. But actual liability is 30 rupees only, Because 100 rupees has already been paid at the manufacturer level, right? So once the tax is imposed here, then immediately the manufacturer will ask for the input. Is that okay? This is called input credit. Am I clear? So where the extra burden is not there on anyone. So finally you are paying here 30 rupees only, but he is charging 130. But one out of this 130, 100 rupees is going back to the manufacturer because he already paid at that level. And here you are paying only this 30 rupees. Am I clear? Very, very, very important one. Second, when it comes to the retail advisor, so here it is what's happening. 1000 rupees plus 300 plus 500, this is becoming 1800. Is that clear? 1800. So on this 1800, if you are charging 10%, this is becoming 180. Is that okay? And out of this 180, 100 rupees is already paid here, 30 rupees is already paid here. Now actual liability will be 150 only. Sorry, 50 rupees only. Am I clear? So actual liability is the 50 rupees. So where the earlier paid money has been given in the form of the input credit, so that the business sector is also happy, government is also happy, and people are also happy. And at the end of the day, what amount is being paid by the consumer is, out of 1800, you are paying 10% as a tax. Is that okay? And that is 180 rupees, and now you are getting this product at 1980 rupees only, right? And if you observe very clearly, this is the actual liability. 100 rupees, 30 rupees and 50 rupees. And though you are charging at every level 10%, that is being given as input credit. But when it comes to the final percentage that is being paid by the consumers is 10% only, that is becoming 180 rupees. And finally, a consumer is getting the product at the rate of 1980. Instead of getting at the rate of 2200, look at the value of the commodity. So the people are getting at the cheaper prices. Am I clear? Very, 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 very important one. So hope you got this, and please note down whatever I have shown you here. Please go through this one very, very, very clearly. Tomorrow similar type of a chart may be given to you in the examination, and they may ask you to calculate how much is the value of the end product, how much is the value that is being paid by the consumer. Very, very, very important. Am I clear? Next, now look at this. In case of GST, I told you input, GST input, right? There is a way to claim credit for the tax paid in acquiring the input. That is called input credit. So whatever has been paid earlier, that can be claimed. How are you claiming this one? How is it happening? Everything is technologically driven, right? You need not do anything manually. Government is following up everything very clearly. What happens in this case is, the individual who has paid a tax already can claim credit for this tax when he submits his taxes. Meaning, you need to submit the returns. At the time of submitting the returns, you can claim this as input credit. Am I clear? So business people are getting benefited, government is also getting the tax, and people are getting the prices at the lower rates. In the end, every time an individual is able to claim the input tax credit, the sale price is reduced and the cost price for the buyer is reduced because of the lower tax liability. Very, 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 very important. Because they are taking the the input tax credit, the value of the commodity is reducing. Is that okay? and that is the reason why the end product is available at the lower rates or cheaper rates. Very important one. Now let's go ahead, look at this. Some questions for you, my dear friends. You can read and answer. Which of the following is the first country to introduce GST? What is the answer? France. What was the year? 1954. You already know this. Second one. Which of the following is the first state in India to pass GST bill? Why states are coming into picture? We know, we have explained this. So because the tax is related to both central and state governments, and whenever you want to introduce a new tax, you have to amend the constitution, and the constitutional amendment procedure will always begin at the parliament level. After it is passed by both the houses with a special majority separately, then that bill has to be accepted by at least half of the states. Clear? Passage by all states is not required. At least half the states must pass with a simple majority. Special majority at the parliament level and simple majority at the state level. So many states have passed this. Now the question is that out of so many states in India, which was the first state? Assam, Gujarat, Telangana or Karnataka? The correct answer is Assam. Very important one. It was passed by Assam on August 12th, 2016. But please remember the name of the state that passed GST bill first, and the answer is Assam. Clear? Next. So this one I already told you. Which of the following amendments introduced GST? 101. Am I clear? 101st Constitution Amendment has introduced the GST. Look at this. And first state I told you already. So that is Assam. Telangana, 14th state. By August 30th, 2016, it was ratified by 15 states. How many states you require? At least half of the states. Clear? Later it was ratified by other states. And Jammu and Kashmir also ratified on July 5th, 2017. Please remember, today means in the month of May, right? In May, Jammu and Kashmir is not a state. Jammu and Kashmir has been, which was a state that has been bifurcated, and two, union territories have been established. Am I clear? So today, Ladakh is an union territory. Jammu and Kashmir is also a union territory. But the Supreme Court of India ordered the government to restore the statehood to Jammu and Kashmir. But today, May 2024, even today also, Jammu and Kashmir is an union territory. Am I clear? And very soon it is going to get back its statehood. Only Jammu and Kashmir, not Ladakh. Am I clear? Ladakh is going to remain as a union territory, but Jammu and Kashmir will be restored as a state. Very important. That is the reason why every candidate who is preparing for any competitive examination, you must prepare comprehensively. Is that okay? Whatever you are learning in one subject, you should be able to link the same to the other subjects also, depending on this particular relation. Am I clear? Next, if you look at this one, this is the story I have told you already. So what exactly happened in this, the parliament? So this is the story that has been given here. Fine. So that is not required for you. You just go through this one, right? And we'll be going ahead. Look at this. And finally, it became a reality with 101 Constitution Amendment Act, and it became a reality by July 1st, 2017. Am I clear? Next. So next, another important point I would like to show you is that GST Council. This is a very important aspect of the entire GST. In this GST council, you have the central finance minister, and you also have the members. The state finance ministers are all the members here, and the decisions are taken collectively in this GST. Very important one. So this is a governing body having 33 members. Very important one. Is that clear? So this is about the GST council, and the decisions are finalized only after it is decided in the GST council. Is that okay? So this is the apex body to modify, reconcile, or to procure any law or regulation based on the context of goods and services tax in India. Anything related to GST, whether you want to modify, whether you want to add, whether you want to do anything, that must be done only by the GST council. And this GST council is headed by Union Finance Minister and assisted by the finance ministers of all the states. Very important. So tomorrow it may be a possible question: who of the following are the members of the GST council? Who of the following are not the members of the GST council? Now you know the answer, and you can answer it very easily. Right? So now if you look at the GSTN, so this is the software, Goods and Services Tax Network. This is a software developed by Infosys. This may be a possible question. Infosys is one of the very top IT companies in India. And whatever we are discussing about GSTN, Goods and Services Tax Network, which is a software that has been developed by Infosys. Is that okay? Very important one. This is the non-profit organization formed for creating sophisticated network accessible to stakeholders, government and taxpayers to access information from a single source, that is nothing but the portal. So this is the one-stop solution. Everything that is required for the stakeholders, that is required for the customers, that is required for the taxpayers, that is required for the government, everything is available under one portal, and that is called GSTN, and it was developed by Infosys. Clear? Next, another very important point is that the first GST council meeting was held on September 23rd, 24th of 2016. Is that okay? And the latest one, that is the 52nd GST council was held in October 2023. So I told you we are in the month of May 2024, and after the 52nd GST council, so far no GST council meeting was held because of the elections. Clear? Am I clear? Very important one. And actually the meeting was supposed to be taking place in the month of January, but it could not be taken up. So later the election code has come into the picture. That is the reason why the 53rd GST council meeting will be held only after the election. Am I clear? I told you we are in the month of May 2024. So for us, the latest information is 52nd GST council held in October 2023. Clear? Before your examination, if GST council meeting is held, that will become 53rd GST council, and the examination they may ask you regarding the 52nd GST council. Am I clear? So let me tell you very clearly. In the month of June 2024, you got a UPSC civil service examination. Clear? And you also have got Telangana state TSPSC group 1 preliminary examination. Before these two examinations, no GST council meeting is going to be held. Right? Take it for granted. It is not going to be held. So if there is a question with respect to GST council, it will be 52nd only. That happened in October 2023. But the people who are writing the exam in June, right, in July, August or later, then by the time you write the examination, the next council meeting, meaning 53rd GST council meeting will be held, and you have to update your information accordingly. Am I clear? So that is the reason why updates are really important. That is the lifeline for your success. Am I clear? So this is about the total GST that I wanted to discuss with you, and kindly remember each and every point and revise all the points very carefully. So thank you so much, and I will see you in the next session. Thank you.